Hello, Bear Ball Traders. This is Vicer. It's March 10th, 2020. This is an options trade in Apple that I made today. The expiration date is March 13th, 2020. It's 3 days away for this particular option. I sold a put. I sold the 240 strike put. So I am short one contract here, and what this means is that it's a bullish position and that I'm anticipating price to close above $240 on Friday, or I will manage the position before then. So I'll take you to the chart real quick, show you where I put on this trade. This is the 240 put Apple strike chart. It's a 1 minute chart for today. You can see price throughout the day. I sold the contract right here at $1.07. Once again, the multiplier for options is 100 to 1, so I collected $107 in credit or premium, and price dipped down, came up, and closed about 45 cents. Now, this is a swing trade for me, so I have zero interest in managing this position at this point in time. I'm looking to close this position at about 4 cents, meaning I'll buy the contract for 4 cents back, hopefully tomorrow, possibly Friday, or on Friday as we approach the end of the day. If I'm still long the position and we're looking relatively bullish, and I still have about 30 or 40 points in Apple, then I may just let the option expire worthless. I don't have to do anything in my account. The option just expires worthless. There's no transactions, there's no fees, nothing like that. This type of trade is it's a naked position, which means I'm short this 240 strike. So if price does close at 240 or below and I get assigned 100 shares for every contract, you have to have that much cash in your account. So I would need at least $24,000 to be able to receive this position, which is 100 shares of stock. When you meet with Tom Sosnoff from Tasty Trade, he'll probably talk about the Greeks and premium selling, things like that. I have two Greeks on here. One is delta, and this is for illustration purposes. Delta is essentially the probability of expiring in the money. So there's a 4% chance right now that at the close on Friday that Apple closes at $240 or below. Theta is the time decay or value decay in the option. So this option is expected to decrease in value at 24 cents a day. So it's negative theta, right? So this option should once again decrease in value at 24 cents a day. So ultimately, like I said, I'm looking to take the position off at around 4 cents or let it expire worthless. Once again, this is a swing trade, not a day trade, and this is why I did not take the position off in here at about a 55-60% profit, nor did I stop out in this range, because this is a swing trade for me, and if I were to get assigned the stock, then I would be happy. So I hope all of you enjoyed this trade review of selling naked options in stock and collecting the premium, and I hope all of you had a green day. Hopefully tomorrow I can join chat and participate with all of you. Thanks, and have a good night. Bye.